What's up, everyone? How's it going? Welcome to this week's pre-week analysis. This is the week of July 28th to August 1st. So it's the last week of last week of July, and it's going to be interesting to see how this next week plays off as it is FOMC and NFP week. And let's start this week's pre-week analysis by simply looking at the financial news that's set up for this week. So Monday, pretty calm day. We don't have anything really we have to worry about. Yep, nothing really have to worry about. At 10:30 we have these US 3-month, but nothing significant that would actually impact the market to a high extent. So Monday should be a pretty calm day. Now Tuesday we have PayPal earnings, Boeing earnings, Procter Gamble earnings, UPS earnings, United Health earnings call. We just have jolts on Tuesday, nothing else other than jolts. And because of such, we should be able to trade on Tuesday without worry as well. Jolts, you simply just want to keep a 2-minute interval around it. That should do the job. Wednesday, we have FOMC. I likely will trade during the morning simply because there's nothing really high impact that I need to worry about other than this FOMC release coming out later. If we see a right setup and if market activity has demonstrated itself to provide good opportunity on Wednesday in which we can follow the flow of capital, we will absolutely take those trades on Wednesday, but we will not be trading during that time when FOMC is going on. Additionally, we do have all these BOC Bank of Canada news and pending home sales. Nothing really we have to worry about. We have BOC press conference as well. Nothing will crazily impact the US markets other than FOMC, of course. As you see, ADP, employment change, just crude oil inventories at 9:30. We might want to take a 2-minute interval between it, but other than that, nothing should be insane. We do have US interest rate decision. Yeah, federal funds rate. I definitely would be careful on Wednesday. Thursday, we don't have anything we have to worry about. We do have unemployment claims, but that's in the morning. Realistically, we should be able to trade these days if the opportunity presents itself. NFP, same thing. I'll be looking for a setup, but if no setup presents itself, we will not trade. Sometimes you can leverage these news opportunities and news liquidity that has been made and the sentiment to our advantage. Like prior, I said that you should not trade when there's news, and I still adhere to that, right? You should not trade at 7:30. But we're trading after around 8:45 to 10:30, right? There's nothing too significant in terms of news than other than ISM, manufacturing PMI, which means that we can actually trade and potentially leverage the release of this to make some decisions. Now, the volatility might be different, price action might be different, the amount of passive orders might be different. We have to use all of that and leverage it. If we can leverage it within our system, then we can take a trade. But if that is not apparent and visible and there's no high conviction, you should not enter. So I would treat it like a day where you would be more careful and cautious as compared to other days. But other than that, Friday does not. This week is FOMC and NFP week. It is a news heavy week nonetheless. Just have to be more cautious and only trade these high conviction setups after Wednesday. Wednesday and Friday definitely have those high conviction setups to take, but Thursday, Tuesday, and Monday, we should be chill for normal trading days. Now, let's get straight into our analysis on the charts now. We'll look at ES, NQ, and VIX to determine a bunch of different things and set ourselves up for this upcoming week. And we'll leverage the higher time frame footprint chart as well. So let's start off with the 4-hour footprint chart and the 4-hour candlestick chart. on ES. We won't go too far, and as you see how you already opened, the market has made a pretty big gap towards the upside. And with that gap, in this upcoming week, I do want to see this gap get completely filled. There's no structure here or anything there. It's just a complete imbalance within the market. I want to see market fill this imbalance before we make a further reaction. Simply from that gap, that is what I'm looking for. Sometimes these gaps stay there for a very long time, but then again, that's hard to actually tell. There's literally no volume that has been built up in this area. This is above all-time highs and there's no volume there. That speaks wonder as to how much buying pressure we're actually getting. But let's go ahead and mark out this 4-hour zone that we have right here. Mark that out right there. Mark that out right there. Mark that out right there. And mark that out right there. And I'm gonna assume that from here to here, a lot of the volume will be right here, right at that 4-hour. And we can test that hypothesis as well. Yep, would you look at that? Mark out this level as well. And we won't go too far down as it's a week of movement, right? Like from this week, we moved that much. So realistically, marking out this much in terms of levels should do the job. We'll just mark out this range as well. Because it doesn't hurt to do so. You just have to see how the market opens on Monday, and that can play a strong determining factor as to where we actually head. Looking to see if there's any 4-hour zones we might have missed out on, but I'm not seeing anything of that nature. So I want to go ahead and see the action that happened here and look at the volume. This is going to be a key and important level that we likely may go ahead and test. If you start seeing reaction there, this might be a good area to load up on some longs. If not, it might be an area to see a break and retest. It's just something we have to seek. But we did see a lot of selling delta come here, minus 2k selling delta. But as you see, a lot of these sellers got absorbed. Within these two candles, this entire area is an area where sellers have gotten absorbed, likely an area of big passive participants within the market. Because of that, I'm gonna go ahead and simply extend this. I'm not worried about that simple liquidity line on the chart. I'm more focused about the entire range where we saw that seller absorption. And honestly, that would start from this bottom point downwards. So we'll go ahead and adjust that as well. Move it to that bottom point downwards. Because that is the exact and more specific area where we saw all these sellers come in, but unable to push down. And this is where we saw a lot of volume as well. That's a key indicator of seller absorption. And this on a higher time frame as well. Let's keep checking the other levels as well. We have this level here where we saw seller absorption as well. You can see large aggressive selling, large volume. And you have this area. This area, we don't really have much volume at that area. This is likely more of an exhaustion type of play. Simply because we likely saw seller imbalance. Sellers, aggressive continuous sellers did not have interest in purchasing sells lower than that area and we simply bought up. So I'm gonna go ahead and remove this area simply for the sake of pre-week analysis. When we are conducting pre-market analysis tomorrow and the days after, we might mark that simply because we do not know this fact. This fact gives us an idea as to why this area below might actually be an imbalance below area, and that really starts here. So I'm gonna call this area imbalance below. So this would be a more accurate representation. And that imbalance below might continue until this lower area where we see that volume fill there, volume there. This is going to be a valid area as well, this liquidity area. And we see this gap get created where previously there's a lot of volume. That might be a good area that price may want to test. But that's just something to keep in mind as well. Same here. We're seeing that the areas with high volume tend to be the ones that generate our main liquidity levels. Just keep that in the back of your head. In this one, we do see seller absorption there to a certain extent here. Valid. Here again, seller absorption there. Lower volume, but still, it's correct. Here, 848K. Not really any volume that's going on there, but it is a big wick, and since it's a big wick, I am going to keep it marked. Now let's go over here. This is within volume, yes. This is within volume, yes. This is within volume, yes. Not much volume below that area, but there is volume. But I'm not even going to worry about that because it wouldn't be beneficial to our analysis simply because it's highly unlikely that price heads all the way from here down till there in one single week. Heading down minus 3% in one given week is pretty substantial, and the market would have to see lots of volume, which can only happen during Newsweek. So if this Newsweek comes out as a surprise, we might head down there, but I'm not too keen on such. But yeah, let's go hop onto the lower time frames and see if there's anything there as well. Not seeing anything there. Likely have liquidity there. 342. Oh yeah, what am I saying? It's down here. We do see a volume area right around that general region, right? Potential sellers got absorbed, so I'm gonna keep this area there, mark it as main. And we have this area as well. I'm not even gonna bother checking that really because it wouldn't enhance the quality of our analysis. 3 hour there, liquidity there. Yeah, that should do the job. Let's go 2 hour. 2 hour, we do have a region here we might have been making liquidity. And that area does have a lot of volume. Not seeing anything else really though. Nothing else we really gotta worry about. 1 hour, I'm gonna just go ahead and mark these highs out. And I'm gonna mark out all the gap fill areas as well. There. Not. We do have this level, which is within volume as well. Can mark this out as a zone now, which is good. And this area and this region as well. 30 minute, I'm not even gonna worry about that 30 minute, but essentially, if you just look on the 1 hour, we have a lot to work with, which is benefiting us. And honestly, what I'm seeing, it's simply telling us that we likely are gonna continue this movement upwards movement, unless FOMC or NFP changes that sentiment and drifts it to a sell side focus, because we're trying to follow the flow of big capital. If everything is going positive within the economy, hedge funds would likely continue to push the market upwards. People and markets would likely continue heading upwards. But if we see a sentiment shift, we likely will head down. But from where I'm at right now, this is how my preferable outcomes would look. And before we do that as well, I do want to extend out our volume profiles just to see. Yeah, we have most of the volume down there. and majority is here at this 4 hour. It's confirming what we were thinking. And at the lower gap fill area down there. Okay. Okay, that's essentially just confirming what we were thinking. So these are going to be my preferable outcomes simply looking just at ES. I would love price to head down to here at minimum, and then we see continuation upwards breaking the all-time highs. That would be what I would like to see. But we may also see something like this. This, I don't really know. But this would be my most preferred outcome, I'm gonna be honest. And let's just go ahead and mark these white. These two are gonna be my most preferred. Either reaction off this lower gap fill area or this 4 hour. And this 4 hour is gonna be my most preferred simply because this 4 hour has a lot of volume to it, and if price can make such a big reaction down, a lot of sellers can continue to get absorbed at this level, and then we might head upwards. Typically, when we make such a big imbalance, we at least go ahead and fill this imbalance before heading towards either direction. So this is going to be a key level I look out for, and this level I'll also be looking out for, but not as much as this level or this level. That's simply what I'm going to be looking for. And honestly, from how it looks like currently, let's go ahead and see. We don't have much volume to back up any claims, but if we can break below this gap fill area, we might be able to take shorts just targeting this area for those who are actually going to trade these Asian sessions. That might be a good play to potentially take. But yeah, these are going to be my preferable outcomes from what I'm seeing on ES and with volume analysis involved. Now let's go ahead and take a look at NQ, and we'll do this rather quickly because it should not take too long on NQ, simply because we already have the base idea from ES and we don't have any order flow to look at on NQ. We're just seeing and using NQ as a way to either validate or invalidate the claims that we have currently made. Not going to go too far down. We'll go until down here. Or since that one is so close down there. Three hour. See a 4 hour here, 3 hour there, I guess you could say. Because we did this today, we might not even have to do pre-market tomorrow, right? I mean, we're gonna do pre-market anyways, but we might not have to mark out so many zones and levels simply because we did all of that hard work today. We're just gonna get a refresher on such and get that specificity we found using order flow, especially on ES, right? This 4 hour, we got a very specific zone where we saw those sellers get absorbed and where price may actually make a reaction. On NQ, we can do that, but it won't be as significant in terms of edge, and that's why we will not perform such. Mm, 3 hour there. 2 hour, we have that same level here, so looking very similar to what I'm seeing on ES right now. We have a smaller range there though. Let me just mark all three of these areas out. Preferably this area between them, that's the main area I'm looking out for, so you might as well just mark out that range. Mark this out like some different type of zone per se. Um, let's see if we can change the middle line. There we go. You can simply do it like such. This area is what I'm going to be looking for on NQ, but not really seeing too much else in terms of 2 hour. Mm, mm, mm. Yeah, not seeing too much else on the 2 hour. 1 hour we have this level down here and that zone, but that's been broken, but nothing else really on the 1 hour. And that pretty much concludes. Let's do a volume analysis on NQ as well, simply because we can leverage that. And we do see that a lot of the volume, if you take a look, is a lot. Ooh, that actually makes it quite interesting. I do want to see. Oh, no, it is at the 3 hour. The same as where that 4 hour was on ES, we have a lot of volume there on the 3 hour, which might mean that price is attracted to this region and market participants might want to gravitate towards that region so they can get a lot of their orders filled, as there's a lot of volume that has been transacted there. We don't exactly know why there's so much volume, but we can leverage the fact that there is so much volume to potentially make returns. Now we do have volume here as well around these liquid levels, validating those. This region would be a low volume node, so right under. And this is the same area that we saw that as well on ES. We saw this imbalance below region on ES. And Q, we also see that imbalance below area simply because of that such low volume region, right? So we might go ahead and consider this as the imbalance below region, which likely can continue until this region, which maybe we can find some more specificity from on the 30-minute. Yeah, it would be right there. Mm, this is a rare occasion where we actually mark out a 30-minute level. Uh, yeah, that would be how we do it. Simply because that's the area where I would consider the imbalance below to stop, potentially. But yeah, from what I'm seeing on NQ, it's honestly just strengthening my thoughts that we likely will head down to this area. That would be my most preferred outcome. Head down towards this region and then see a reaction. Or my second most preferred, head down to this region and then see a reaction. And then my third most preferred outcome would be if we headed down till here and then saw a reaction. What the hell? What? Okay, there we go. Yeah, this is most preferred. Hold on, let me make it easier. This is most preferred. This is our second most preferred, and this is our third most preferred. So I do want to see a reaction off of this level and this level, same like ES, and potentially this level. That's what I'm going to be looking for. I wouldn't necessarily long until we have closed this imbalance that the market has made, but we might be able to short into that imbalance coming upon Monday, if London session doesn't get us down there before then. Honestly, I think within the London session we can likely get down there, fill that, and maybe in New York session we might head down until here or make a reaction. And that's likely what we're going to be looking out for on Monday. That's what I'm going to seek to see. And that honestly just confirmed what we had on ES. But now, if we take a look on the VIX, let's see if we can see anything else per se. And let me go ahead and mark out a horizontal line down here at these lows. And what we see is that the VIX is making lower highs, lower lows. We're in a clear downtrend on the VIX, right? And what that tells us is that that's bullish for price, right? Because the VIX is opposite of what price is. And because of that, it might actually be a difficult decision to enter short unless we're at a key level over here. And as we see, just take a look at what happens to price every time we enter around this similar region. And wow, this is honestly quite insane in terms of correlation, right? And things like this typically aren't a coincidence, right? I'm gonna just go ahead and mark all of this out. We'll start from up there, simply head down here. Every single time that we have entered in this region since since last year, every time we came down to that area, we have bounced, right? And we can potentially extend this as well and see a reaction, right? Yeah, this is honestly a very, very, very key level for the VIX, right? Even until 2023, right? Because in the past, we have gone down. Okay, this might be quite cool to see. And yeah, right now it looks so confusing. But just take a look. Since this area, this has always been a resistance relative area. When we broke above, it wasn't really significant after that. It started to get significant after this area, right? After this big buying imbalance we started to see at 2020. After that, we've seen so many bounces from this level, right? One, two, three, four, five. Then we broke below it, used that relative area as resistance. Then we broke above, used that support, resistance, came below, resistance, resistance, resistance. Finally, price broke above, saw support, came down, resistance, moved up, and now we've been bouncing around that relative region again. So honestly, we can simply just play a game of zones, right? And work with that. We likely can do the same thing here as well. Hold on. There. Let's go ahead and extend this and see what we find out. Take a look at that. Look how much times we have reacted from this area. And majority of the time we've came to that relative location, we have bounced. What the hell am I looking at? Okay, this is 2000. But yeah, this lower level I would count as even more significant, right? We are already in a very big area that price has always seen seller action, or in the VIX, it goes up a lot of the times you come to this region. So if we come back up, make a retracement and break through this area once again, maybe when we come to this area, we start to see a sentiment shift and we shift into a bear market. Just something I'm going to be looking out for. But for now, I think what the VIX has told us is price might make a reaction from this region, right? And who knows the size of that reaction. If price simply heads to this 4 hour down here, then what that might mean for us is that the VIX might head into this region around this area, right? And if the VIX heads to that area, what that might tell to us, if we see continued seller reaction, then we might go ahead and test this region again, maybe head to this region. But after we enter into this relative region on the VIX, I am gonna, in a long-term perspective, I'm likely gonna take a lot of my profits there and look to DCA when we are into an area near the top of the VIX spectrum, right? When we are down at this region, I'll be very careful in investing more, right? Because that would be horrible in a DCA perspective. It would be a great area in terms of exiting, in which maybe if we head back up from that region, now the upside is much more confusing because there's again multiple sides of the spectrum. But if I would just say one thing, I would say anything above this region, like this entire region, is a decent buying area. Yeah, that seems pretty viable. That seems pretty viable. Because a lot of the times we've entered into that region, seen a lot more selling action, which is bullish for price. Let's go ahead and see where the selling action occurred. April 7th. Let's go ahead and see what happened here on April 7th. You'll see the amount of correlation it has, right? Take a look at what happened April 7th. We are very low, and this would have been a great area to buy, right? Because if you take a look from where that's sitting at right now to where we're at right now, it's around a 32% return, which is absolutely phenomenal, right? That would be amazing. So yeah, this would help in terms of more long-term perspective, but can also build us a sense of back-end sentiment. So for now, it's not going to change or confirm or deny the fact that this is valid. It's rather going to tell us that we might not have much more room to continue heading up. And we have to be very careful in continuing to take longs and such because the market might shift at an instant. And we have to be able to identify that. But yeah, that's going to be my take on pre-week analysis for this week. If you have any questions regarding anything I said, please feel free to let me know in the comment section down below or join our completely free Discord server. The link is in the description down below and you're likely going to gain a thing or two out of it. Additionally, if you want to take advantage of great footprint tools like the one I'm using right now, all for completely free to get started practicing and integrating it into your strategy, check the link in the description below as well. Addis is literally the most user-friendly footprint tool that I've seen, and there's a lot of free functionality. So I highly recommend you guys to check it out, and I have left all my order flow resources in the link in the description as well. But other than that, I guess I'll just see you guys tomorrow morning for pre-market and later tomorrow for market analysis session. So I guess I'll go ahead and see you guys then. Goodbye.